Okay. Uh, I also want to show you some certain things in this forex trading, and basic things. Two things I would like to show you for this video is just two things: support and resistance. Then trend line, using trend line to catch spikes. Two things: support and resistance. Then trend line, drawing trend lines to catch spikes. And when we talk about spikes, we are talking about buying the market. So let's see it here. When you open this chart, I know you can see in this chart uh, the line. There is one white line on this chart, but I will tell you about it more later. That is a 21 moving average, but that should come later. Pick this one I want to give to you. What I want to give to you now is support and resistance. Then using trend line to catch spikes in trending market and uptrend for that matter. So we use a trend line to catch spikes for uptrend market, not downtrend. Uptrend. You use trend line to catch spikes. Okay, as you are viewing this chart now, this is a boom 300 index, and this is 1 minute time frame. Okay, how? What is support and what is resistance? Because you have to understand the support and resistance before you know even how to draw them and where you are expected to draw them. So, support. Before the definition, let's go to H4. That is a 4 hours time frame. You see this 4 hours time frame, and if you watch on this chart now, you can see red line up and yellow line down. Yes, and the up one, that red line you'll see now. Yes, I know you can see it now. The red line up is resistance, is the resistance level. Then the yellow line down is support zone or support level. Then you may ask, how do you draw this line you're seeing? It's very simple. Just click on the screen as you can see, then come to this symbol lines just before M1 as you're seeing here now. Before this M1, there's another symbol there. Click on it and see your line here. See all these lines now. Then you click on this horizontal line. That is the third line from the left. 1, 2, 3. You can see it. The center one. Click on it and come to the chart and drop it. That's how you can draw it. Yes. It's clicked now, it's selected, it's deselected. Click again, it's selected. You can move it down or move it up. That's how to draw this line. And if you want to change the color of this line, just tap and hold it. And when you tap and hold, see option up here. Come to this upside and click on this pencil uh, sign. Click on this pencil sign. Then come to this place now. This window. Click on this color. This style, the last one. Click on it and change any color you like. You can click on this color here and say done. Done is up. Watch this very well. You see done up. At the right corner of the window, you can see it. The right corner, top right corner of the window, you see done. Then click on done and see the color you have on the chart. All right, that's how you can change the color of the line to differentiate support and resistance on the chart. I'll tap and hold this line now I've drawn, and I will go up the same up right corner of the window, end extreme right corner of the window. You see it. I've tapped and hold the line again, and I selected it. Excuse me. Then this delete sign, click on this delete sign. Now I'm going to click on it. I'll click on this delete sign, and that line is gone. So let's define. I've told you before now that this yellow line is support zone, support. And this red up here, you're seeing this red line. You can see this red line up here is resistance zone. So let's define, excuse me, let's define support zone or support level. So we say that support level in the market simply means the highest level the BS or the sellers push the market down before the bulls, which are the buyers, took over from them. Okay, that is support. The level, that support level is the in the market. It simply means the highest level, the BS. And when we talk about BS, we're talking about sellers. And when we're talking about the bulls, we're talking about the buyers. So when we talk about the highest level, the BS or the sellers push the market down before the bulls, that the buyers took over from them. Then we are talking about support. Anytime you hear pushing down, and when they stop pushing down, some forces will tell them, no, don't push down again, we are here. And that place of turning point of that market is called support, down. So that is support zone or support level. That particular place or turning point is called support zone or support level. That is when the sellers, they continue to push the market down, push it down until a particular place where they will now reach. Like if you watch this chart now, you can see from here, the okay, let me point at it. You understand what I'm saying? This is 4 hours time frame, and that's where you should use to draw your support and resistance zone. Don't ever draw it in lower time frames, because that should give you a false signal. Yes, it's always good to use higher time frames to analyze your market, and it's better there you see the overall movement of the market where you can draw your support and resistance. So what is now resistance? Because I've explained to you support, where the when there are the particular point where the sellers exhaust their momentum, that particular point is support. In other words, when the sellers are pushing the market down, pushing it down, then until when they are tired, the buyers now will take over, which are the bulls. And that particular point, the bulls took over from the BS, is called support zone. And this happens almost all the time in the market. You see this chart? There was one particular place they will now take over. They'll see you that these people are tired. Okay, let's push the market. And sometimes they will push it down. They will still push it up. They will push it down. They will be struggling until one part of the market, whether either the bulls or the bears, will now take over. Then the other part will surrender. So that is uh, the support zone. On the other hand, resistance zone or level in the market simply means the highest level the bulls or buyers pushed the market up before the bears, which are now the sellers, took over from them. Hope you understand what I'm saying about it, because this resistance and support zone are very, very important in the market. You can't do without it, because that is the major turning points. In other words, just call it major turning points of the market. That is support and resistance. If you go to your chart at 4 hours time frame, you will see this one is 4 hours time frame, but there is something important you're supposed to know. Every Android, just note this, every Android has four zooms. Has what? Four zooms. Every Android has four zooms. They have zoom 1, zoom 2, zoom 3, and zoom 4. Okay, watch this chart now. Just watch it. 4 hours time frame. You see the zoom now. See another zoom. This one is the last zoom and the first zoom. You can call it the last zoom, or the first zoom. Sorry, first zoom is this one, or zoom 1. Call it that is zoom 1 now, or first zoom. You see how this, you are seeing the overall reaction of this market now. Using this one, you can see that support and resistance zone very well. Watch this one now. Let me just point it for you. Watch this. This one now is what? This line I'm touching. I think you can remember the name. This particular line now, this yellow line. You can remember the name I called it. If you don't remember, please, I said it is support zone, or support level. Good. Then this red line here, now, this red line I drew here is called what? Can you remember? Okay. If you can remember, good. Yes, I know you can remember. It's called resistance zone or resistance level. This line now, up. Okay. Then that's it. And when you identify these two zones, that is when you will begin to make profits in your trade. Because if you can't identify them, you will not trade well. You'll be making mistakes. Because we usually tell you to trade with the trend. Make trend your friend. Don't trade against the trend, else you'll be losing. But when you trade with the trend, you enjoy your trade. Okay, watching this support and resistance zones have shown you in this 4 hours time frame. If you go back to 1 minute time frame, you may not see the line again. Okay, see, it's only this resistance zone you're seeing. You don't see support again. Yes, because that is a 1 minute time frame. You won't see it. And what do? You go to 4 hours time frame and see the overall reaction of the market, where the market is going. You can predict it from 4 hours time frame and above, 1 day or 1 hour, but mostly it's 4 hours time frame you use to analyze your charts. Uh, Many things. The other one I will teach you what we call top-down analysis. Yes, and higher time frames. So, looking at this, uh, Looking at this chart now, and I told you every Android has four zooms. This is zoom one. Watch now. We're going to see zoom two. Just watch. Hope you're watching. This is zoom two. This is zoom one. Watch now. It's going to increase. It has increased now. This is zoom two. Hmm? Then watch again. We're going to zoom it. Zoom three. This is zoom three. Can you see it? The difference between all these zooms? I'm going to zoom it, the last zoom, which is 4. And this is the last zoom, which is 4. And all these index we are trading, they work differently and on different zooms, but I will tell you that later. I will discuss that later, not now. But because our topic today is support and resistance, then trend lines to catch a spice. That is our focus for today. Okay, then how do you catch spice using trend lines? I've told you how to draw this support and resistance. Watch here. This support now is drawn using, if you watch here, that the market, the highest peak, excuse me, of this market is somewhere here. I want to show you. I want to show you something just to watch. If you watch, the highest peak of this market is here. Watch here. This is where what? Can you just guess now? Is it the boost or the BS that reached here? This line now. If you watch from here, you know that the BS, sorry, the sellers, eh, they pushed from here down. They pushed from here down. Hmm? They pushed from here down. See this arrow, and when they reached here, this arrow now, I'm shaking now. Wait, excuse me. When they reached here, when they reached from here, they reached here. They become tired. The bears or the sellers, they push the market down to this place, and the market turned back. Who pushed this market up? The buyers or the bulls. They push this market. Excuse me. They push this market up here. And how do you draw this your support and resistance? If you zoom this more, second zoom, you see that, zoom it, the third one, fine. Then you see that, watch here, let me show you something. Okay, if you watch here now, watch this arrow I'm pointing, it's more than one spice. So the reaction was more, not only one, not only two, there are more than two here, as I'm pointing this arrow now, telling you that there are some forces around here that made this one. If you watch, just watch this arrow now. If you watch this arrow now, even this one now here, you see they did not reach here and they pushed back. They came down here again, they pushed back. Count it, 1, 2, 3, 4. 1, 2. So the reactions was actually more here, and that is why we have our support zone here. The most, I mean, the place where the most turning points of the market, yes, is support or resistance. Watch the resistance up now. Watch it. Watch what I'm going to point now up. Hmm? Watch here. Watch this line. Watch where my arrow is going. Watch it. Watch this one now. How many of them can you see? 1, 2, 3. So a lot of turning points there. There is a force there. It's only one. Look at this one. It's only this one breakout. And he broke out, he still turned back. He turned back again. Telling you that Though you broke out, then you still come back because the first day is still high. And when he came back, he continued. Look at it. Look at the level. Look at this one. So that is why we said we have to draw our support here, and our resistance here. So that's how we can draw support and draw resistance. Okay, that one taking. That one taking. Good. If you go back like this, you may not see it. Let me delete this one first. I will still show you. Oh God. Sorry. Okay, sorry. That's a mistake. Suppose. Okay. Let me delete that. Supposed to delete it. Yes, it's deleted. Then I've shown you, and I hope you understood now how you can draw your support and resistance. I said you should draw this using high time frame H4. That is recommended, highly recommended. Don't use lower time frame to draw your support and resistance. It's wrong because it will give you it will actually give you fake signals and it will not work out. It's high time frame. Look at what I use now. Look at it here. I think you can see it here now. Watch it here. Just watch this my arrow. Watch it here. It's H4. Are you seeing it? Boom, 300 index H4. So that is it. We are done with this one now. We are done with support and resistance. Note, always buy. Always buy. Look at it here. You see when this price, okay, let me show you. When the price hit this, look at it here. When the price hit this support zone, you buy. And your profit target will be at the resistance zone. Although that one is for day traders or not as a scalper. No. Yes, or swing traders. But for scalpers, you don't have to hold on until it reaches that it until it reaches here this resistance zone. No, as a scalper, you just scalp small and get out of the market before the market can turn back against you. So that is what you should do. So when the price hits support zone, you buy. Look at it. Support zone is here now. Look at support zone here. You buy. And when the market hits uh when the market hits resistance zone, you do what? Look at the resistance zone. When the price hits the because this watch this now. This is the uh resistance zone. If it hits it now and you start selling, so you buy at the support zone and what? Sell at the resistance zone. Take note of that. Always buy at support zone or support level and sell at where? Resistance level. Okay, before I will show you how to catch a spice using uh, trend line. It's important that you know these. What are the three important questions to answer when you open a chart? What did I say? I want to make myself very clear. What are the three important questions to answer? I mean, you will answer whenever you open a chart. It's not just to open a chart and start trading. No. there's some there are three important questions. You to answer these questions before you start trading when you open a chart. One, take note. One of the questions, uh, one of the questions we should ask and answer is, what is the market doing? Hmm? What is the market doing? That market at a particular point in time you open the chart, what is it doing? Is a question. What is the market doing? Is it trending or ranging or consolidating? What is the market doing? Is the market trending? That is either uptrend or downtrend. Is the market ranging or consolidating or choppy market? Yes. If it is trending, hmm, if the market is trending is whether it's going up or it's coming down. Like if you watch here now, okay, let me show you from here. As you can see this chart now, you can see that this market from here, this market is trending. From here is downtrend. Hmm? Now, when you open the chart and see whether the market is trending or not, if you see something like this, you know the market is trending. That is number one. This one is downtrend. This one I drew is downtrend. Then, if you see it like this here, like this, okay, let me show you with this arrow too. Like this arrow now, go up. You know the market is it's trending and it's going up. So that is trending. Okay. If it is trending, then is it uptrend or downtrend? You have to know that, which I've just showed you now with this the arrow. If it's ranging, if it's a ranging market, you will see that it is trading horizontally between two boundaries. Fine. If it's ranging, let me show you something. Okay, watch it here. This is a clear ranging market. It's just going up and down in a horizontal level. Watch here now. Watch this arrow now. I'm going to draw to see a ranging market. You may know this before self, but just do it here. Another one. That's a ranging market. Just horizontal level. Look at where they are. It's not going up. From here, it's not going up. Look at these two arrows, and they will, these are the just directions you can see here. So the market from here now, no going up. From here now, check. Then it's from here that the market started going up. You can see where the market started going up from here. From this point, yes, from this point now the market started going up. But downsides like that is it was just ranging. So ranging, you stay away. Don't even try to execute any trade because it will not be in your favor, certainly. Or it may be, but it's better stay away. That is it. That's number one question to answer. What is the market doing? What is the market doing? Is it trending? Is it ranging? Is it consolidating or choppy market? Find out. Okay, the second question is, what are the most powerful levels? Because you can just draw support and resistance only in a trending market. You can't draw support and resistance in a ranging or choppy market. No. It's only in trending markets you can draw support and resistance. So, what is the most powerful levels, that support and resistance. This should be found only if the market is trending. Always buy at the support level, I told you before, and sell at the resistance level. That's number two. Remember, number one, what is the market doing? Trending, ranging. If it's trending, is it up or down? Okay, second one is the most powerful levels, which are the support and resistance. And this can be drawn if the market is trending, not when it's ranging. So, and you have to sell at the resistance level and buy at the support level. Very, very important. Okay, that is the second question to answer. The third one, and very, very important, is what is the best signal to enter the market? This means the best conditions, the right time to execute a trade, buying or selling. That is the third question. Before you can execute any trade, these three questions. When you open a chart, you must answer them. One, what is the market? What is the market doing? Two, what are the most powerful levels, that support and resistance? Three is what is the best signal to enter a trade? Then, what is the best signal? The best signal is pin bar formed either at the support or resistance level in H4. Don't just go to 1 minute time frame. Like this is H4. Then don't go to 1 minute time frame and say that you have seen okay, that you have seen a pin bar formed at the resistance level. No. Excuse me. Always go to, this one is 1 minute time frame. Always go to H4. Then you can zoom out very well. Okay, let me show you. This is pin bar, but this is bearish pin bar. This is bearish pin bar. Okay, let me show you another one. Okay, you can use pin bar to confirm entry. Yes, pin bar is powerful to confirm entry. Okay, watch this one now. Watch this pin bar here. This bluish pin bar. I want to show you here. Sorry. This pin bar now. Watch it. This is pin bar. This pin bar. This pin bar. So this pin bar now, if you watch very well, is at the support level. Okay, look at it. It's very close to support level. See the support level, and this is H4. Okay, I'm zooming it so that you can see it very well. Watch here now. Watch here very well. Okay, this pin bar now. Watch this pin bar. Let me this pin bar you are seeing at the center now. Formed before, very close to the support zone. Then this pin bar formed, and the bluish pin bar telling you reversal. Remember, though I'll still tell you reversal candles. We have reversal candles, but that doesn't mean that whenever they formed that the market must reverse. Sometimes they will not obey that law. But this pin bar close to the support or at the support zone is a very good signal to execute a trade using H4. That is 4 hours time frame. And you can see it here. Yeah, this pin bar formed here. This pin bar now, look at it here. Look at this pin bar. It just formed here. And this fractal. I would still teach you. This cap you are seeing on this pin bar, this white cap is called fractal. And this fractal will be produced when the next candle are finished forming. See this candle now. See this see next bluish candle. When it finished forming, then this fractal will come out. And the third one now that you are seeing, this bearish candle, is where you're supposed to enter the trade. Though there's little retracement, but that doesn't mean the market will not go up. It can retrace more, then it will continue to the direction of the market. But sometimes when it retraces, some traders will just lose. They will go out with big loss and the market will continue the same direction. So that is why this support zone is very, very important. This resistance and support zone are very important. Then you see it's very close to it. Sometimes you come close to it before you now turn back. Sometimes it will hit it and turn back. So, but the major one is when it hits it. If this pin bar has, at the bone it came down, touched this yellow line, which is the support zone. Yes, you confirm that very well. That is more confirmation that the market will turn. Yes, but when it's close, it's not a rare confirmation that the market will turn. Yes, to be on the safe side, just allow it to touch, allow the pin bar to be formed. Exactly either the support, yes, or resistance. Good. See this one now. Just watch here now. If you watch this one now, I don't know whether you can see. Okay, you can see this. Yes. If you watch these ones now, these ones, yeah. Watch it. Watch these ones now. Where I point it. Though it ranged small, but it not range much before it start going back. It just hit it. See it now. You can see first, second, third, third hit it. Fourth now turned up, and from there the market now revised. So that is important. That's a major thing you should know before you execute a trade. Okay, having said that, let us check uh trend line. Using trend line to catch a spice. I think that is the next thing I see it. I'll show you. Okay, let me show you here. When you want to use trend line to catch spice, always come to the higher time frame. And that's H4 to check the direction of the market. Always come to this H4 to check the direction of the market before you go to lower time frame to execute your trade. You use high time frames to analyze the market and use lower time frame like 1 minute, 5 minutes, 15 minutes, 30 minutes to trade. All right. Okay, let's check it here. Okay, this is 4 hours time frame. Okay, let's go to 1 minute. Okay, this is 1 minute time frame. Though my data is not on, I will put it on, but let me use the old. The market has gone to show you something. Trend lines. Okay, don't worry. Next time I will explain this line you're seeing on the chart. This white line I told you before is 21 moving average. And this one you're seeing down. This. Sorry. No, this one I want. Okay. Yes, these lines you're seeing here, this red line, this green line, and this yellow line. All these three lines you're seeing here is a strategy, but that should come later with this line, this white line you're seeing here, this moving average, 21 moving average. I'll show you. I'll explain to you later. Okay, trend line, using trend line in a trending market, up trending. Okay, not downtrend, uptrend market to catch spike. Yes. Okay, watch here now. Watch here. I hope you're watching. Watch here. This one is sell. Here, here is sell. This market sold from here and reached here. The market sold from up to this place now. This is where the it ended. Can you see? Just watch here now. Okay. This market started here. This one now come down. Come down, come down, come down, come down. It reached here and stopped. Then there was a spike. This spike now started here and went up, right? Yes, and stopped here. And this market again started selling. It started selling, oh, it reached here again. Watch. How do we draw our trend line to catch up another spike? Okay, the market spiked here. Watch. It is spiked here. I always draw the arrow so that you know who I'm talking about. It is spiked. The first spike occurred here, right? The second spike occurred here, right? Good. So these two places, they occurred. You don't know. You don't know what will happen from here. Like it's spiked up now and this one starts selling, right? You don't know where this one will spike again. You don't know where this one will spike again. But you have seen these two. You have seen these two. Yes, you just wait. See the markets. You have seen this one. You have seen this one, right? And these two now that you have seen is where you are going to draw your trend line straight up. And any when the sellers will push the market down, when they reach to that trend line, the bulls is likely to take over. The bulls are likely to take over the market. There must be a reaction. So let's draw our trend line now. Hope you understood what I said. Okay, when the market now, let me repeat it. When it starts selling here, forget about other ones. Just watch here. Watch until you have a trend, uptrend for that matter. Watch this one. This one starts selling, right? Selling. It reached here. You don't know that these people are coming in. These bulls are coming in to push the market up. Okay. When they push the market up first, that is when they push the market from here now, they pushed it up here, right? You don't know they're going to do that. They stopped here. And when they put it up here, just watch the market, be calm. And watch where the next spike will occur. Then the sellers pushed it down from here and stopped here, right? Don't worry, I'm going to tell you more about this 21 moving average. This white line you're seeing is a very nice strategy. But let's next time, not today. Today we're just treating support and resistance zones, then these trend lines. Okay. Then now stopped here. You don't know. You have known these two now. How do you draw your trend lines? From here, I said it now before now. That from here up, you don't know when the next spike will come. You have seen this one, you have seen this one. But from here up, when it spiked, you don't know when this one will spike again. Then how do you guess the next spike? That is what I want to show you with trend lines. Okay. This one has spiked and it couldn't come back and spike again. That show you uptrend. The market is likely to go up. Then go to your trend line. Just click, tap on the screen. You see this. Then go to this symbol here before M1. Click on it. Then see this line, the second one. See this second one now. That is the one I'm going to use. This is what I'm going to click. This one now. This one is a trend All these are trend lines, but this one is one I'm going to click. Slanty form. Hope you understand. Okay. Then I'll click on it and I'll come back to my chart and start drawing from here. From here, see where I put it now. Then I'll go up. This is the two. Tap it here. Are you seeing it? Then drop it here. Come here and set it very well. Hope you can see. It's only these two I know, and I've seen that the reaction came. Then what do I do? I will now stretch it up. I will now stretch it up because I've seen these two. I do not know the next one how it will be. I will now stretch it up from here. Just watch. Ensure that it not go out of this line. Oh, you can see from here now. You can see from here now that this one we know, right? Yes. But from here, we don't know. But we use our trend line to know what will happen. Okay, if you see now, from here up, if you just see from here now, from here up, what happened? What happened? Watch the chart very well. What happened? You can see that from here now, this price, the price came here. Sorry, you know what I mean. Sorry. You can see that from here, price came and hit this trend line, and spiked. From here now, it spiked up until it reached here, which is profit. Okay. Then another one. See it now that this one now came. Sorry. The first one just came. Look at it. It came here. It just passed more and spiked again. Then this one again came and hit the line again and went up. This one again came and passed it more and still went up. So these three now, you have made gain because when they spike, when you just buy, when the price is coming, when the price hits this trend line, you just execute buy order. And when it spike, you close the order and wait again for it to come and touch the trend line again. When you very close to it, don't even wait, because if you wait for it to touch it, you may be executing buy order and it has spiked already before you execute, so it is now going to be against you. So the best thing is when it's very close to that trend line you have drawn, then you execute your buy order. When it hits it, it will spike up. You make your gain, you close the order and wait again for the sell, for the price to come and hit that line again. Very close to it, you execute another buy order. So that is how you can use your trend line to make profits. Hope is understood. Okay. Yes. I don't think we have. What again do I have to tell you? This one before I close. I think there is one thing I'm trying to. Okay, yes, remember. Okay, let me put on my data and show you how to place an order, that is execute an order, enter trade and close uh, at the same time. Okay, let me still cover it. I don't know. Let me put on my data. Yes, and check it. Okay, fine. This you can see. Oh, Jesus Christ. Oh, sorry. I have a meeting with somebody online. He just started me up now. I not even remember. Okay, fine. Let's execute a trade now. From this top sign, this right corner, this plus sign is where you can execute your trade. This boom 300 index, 1 minute time frame is selling. Yes, the market is selling, but I know it will spike. It will still spike. But let me just execute the order now. Just click here to execute an order. Just click here. These people, you are disturbing me. Come on, get out. Let me see something. Okay, look at it here. Look at where I'm pointing. Yes, this plus sign. That way you can click. Just click on it now. And say buy or sell. We are going to sell now. But before, oh God, don't worry. Let's forget about this one now. Let me just teach you. You enter. I'm going to teach you slot size. Slot size, the amount you can use to trade at a time. That is slot size, and that is this is 0.20 cents. Then let's say sell. Just click sell here now. See sell here. See sell. You can either sell or you buy. The sell is here. This button cover the other buy. This buy is here. You can see you sell and buy. Let's say sell and say done. Then go back to chart and see you're selling. The price is going down. That is, the market is going down. So when the market goes down, when market is going down, you sell. When market is going up, you buy. It's just quite different from the offline market. When market is going up in a offline market, is going up, you're going to sell. Yes, like you have let me say you have some goods to sell and the price of the goods increase, that market is going up, you go and sell what you have to make gain, right? Offline market. But it's opposite here. When the market is going up, the price keeps increasing, that's when you buy. So understand that is very, very important, and it's confusing somehow to some people. So if you watch this graph now, the market is selling. And if I go to my trade now, see the gain I've made up to 1.05. Now $1.078 is still going. I think you're seeing it. You're seeing the gain. So I can decide to close this trade now. Because this is the trade. This is the chart. Okay. Then these are all symbols. And this is the trade I've made for today. Though is demo, is not real account. I've made up 29.82. It's not a real account anyway. So when I come to this now, come to trade. This is trade. I can close this order. Just swap left. Look at what I mean by swap left. Swap left from here. From here now, just drag it this way. Click and drag it this way. Click on this, and drag it back as I'm going to do it now. Watch. I'll click and drag it back like this. Then click on this first symbol that have good on it. Click on it like this and say close with profit 2 point this. Then click on it, say done. Come back to your chart. Then go to your symbols, all symbols. You see the gain you have made. That is all. Then go back to your chart, and that is all. So now you can confidently say draw support and resistance. Good. You can trade. You can buy from the support and sell from the resistance. That's good. Then you can draw your trend lines in a trending uptrend market. Uptrend. You can see this one again. We'll not draw this one now. This one again, you can draw your trend line like this. Come here, put it here, and go up straight. You see that how many entered now? 1, 2, 3 entered. So this is how you make your profit. Because it's only these two now. It's only these two. Before, it's only just these two. You know that it has shown you that it's going up. Yes, it is going up. Doesn't always happen like that too. I've been checking it times with that. Many of them do happen this way. But the fear sometimes not allow me to enter the trade because my low equity. So that is the way. When these two now occurred, when these two, I think I showed you before now. Yes, when these two occurred, one, two, then you draw your trend line from here up, direct. Just draw it up and make sure that it not leave this one now too. So when you have up to one, you see this one now, two, this one entered, right? You cut this spike, isn't it? You cut this small one again and cut this big one again. So you have three spikes you have cut. Then when you cut the first second, you can even exit the trade and wait for another turning point. Wait for another opportunity to come, then you enter. I think this is what we can stop from here today. Let me check on this person that just chatted me. I have something with her. I not even remember because of this thing. Okay, so that is all about it. Wishing you good luck, success. Next time I will make other videos for you and teach you how you go. Thank you. Bye for now.